Hello, I'm Dr. Sonali Dharmadhikari. Last session, we have seen Introduction to Cost Accounting and Management Accounting. What is the requirement of cost accounting, management accounting, what are its functions, etc. In that, we have seen management accounting is the accounting which helps management in carrying out its functions. And for that purpose, we have seen the main function of management accounting is cost control. And for the function of control, management accounting has various techniques. So today we are going to see one of the techniques of management accounting, budgetary control. You must have heard the word budget many times. In your house, your mother or your parents may be preparing budget for some next term or for some few months. Or you must have heard union budget, which the government presents on a certain date for next financial year. So budget is a very common word which suggests you that the expenses you are going to incur in future period, that is called budget. Now budgetary control is a very popular technique of management accounting which is applied everywhere in the organization. Now we are going to see formally what is budget and what is the technique called budgetary control. Now we will see the definition of a budget. So it is a financial and or quantitative statement prepared prior to a defined period of time of the policy to be pursued during the period for the purpose of attaining a given objective. If you see the definition in detail, first of all, it should be in money terms or in quantity. So it is a quantitative statement which is prepared predetermined. So we have seen two types of cost, historical and predetermined. In budget, you determine the cost in advance. You determine the cost for future period. So it is a predetermined cost which is prepared for a defined period of time. So the budget may be for a quarter, 6 month, year, etc. or for a month. The period is fixed in advance and for that period all costs are determined in advance. Then they are called budgeted cost. Now it is for a purpose. So we have seen it is for a certain period of time and the objective is also set that for what purpose the management wants to implement the budget. So this is called the term budget. Now we will see what is budgetary control. So budgetary control is a whole technique. There are various steps to implement budgetary control. So the establishment of budgets relating to the responsibilities of executives of policy and a continuous comparison of actual with budgeted results, either to secure by individual action the objectives of that policy or to produce a basis for its revision. So budgetary control is the technique which is implemented by preparing budget. The budgets are prepared first, then they are compared with actual cost and then the steps are taken. So the whole process is called budgetary control. Now the objectives or functions of budgetary control. So as we have seen, it is the technique of cost control. The main function of budget is to control cost. So the objective is for setting the budget is cost control. So you determine the costs in advance. Now we will take one example. Suppose you are living in the other city and your parents are living in other city. Your parents are giving you certain money, suppose 10,000. Now in 10,000 you are managing your expenses. Now after certain months your parents told you that now we are going to give you the amount which is required. So tell me what are the expenses you will require in next month. Now when they will say this, then you will start thinking that how you spend. Otherwise you are just going on spending and spending. There is no limit. So when you want to reduce something, then you will think next month how am I going to spend. So what are the headings, then how much you have spent earlier, what will be the required amount for you for next month. So automatically there will be control on cost. So to have cost control, first step is to think about what you are going to spend in future. So you are determining the costs in advance. If you do not determine, there is no limit. You will just go on spending and spending, and you don't have any record how much you have spent and how much you are supposed to spend. So the budget will give you limit of your spending. So you are spending 10,000 and you prepared a budget that next month what are the requirements. Then it came to 9,000, and when you actually start spending, it may go to 9,200. So this will create cost consciousness. So that is the main objective of budgetary control, to have some limit on spending of the department, on spending of the staff. So the budgets are prepared and the target is given to the staff or employees working in that department. Thus, cost control, the whole technique is designed in such a way to have control on cost. Now next we can say planning. As you are planning for future, you are determining the costs in advance. So planning is the objective and function of budgetary control. Coordination. How the coordination is created? The top management gives budgets to all departments. So they think of future and they think then the earlier expenses or for past 3 months. Suppose you are preparing a budget for next month. What you will do? You will carry out exercise that what are the requirements of the department. Maybe you will study for last 3 months. Then what whether the costs are increased or decreased for next month, and after carrying out a detailed study, you will think for next month's budget. So that is called coordination. And then the top management gives budget to the departments who are actually working on it. And all departments coordination has to be there, because master budget is prepared by considering the all departmental budgets. So that is called coordination. It creates coordination into the organization, and it helps in achieving the objectives and goals of the organization as a whole. So this is very effective technique, and almost all organizations implement this technique to have control. Then communication. Automatically, when you are top management, middle management, lower management, all are involved, coordinated, the communication channels get created. So first, top management communicates the budget to the lower management, which will actually work on the budget, to the heads of department. Then they will communicate to their subordinates. Then actual budget will be implemented. Now suppose the budget is prepared for next month. After the next month is over, the actual expenses are calculated. Then they are compared, budgeted and actual, and the deviations are found out. Then they give the reasons why the expenses went up or went down. All it's analytically analyzed, and then the reasons are given to the top management. Then top management goes through it, and then they gives the corrective measures. So this is the whole procedure of budgetary control. So if you will find that the communication channels are created within the organization. So it helps in communication. That is the objective of budgetary control. Then revision is made, because when you come to know that budget is given but it cannot be achieved because the cost has gone up, then you have to revise it. Then it is guidance to management. All techniques of management accounting are prepared to help the management. So budgetary control is also there to help the management. It guides the management that where you can reduce the cost, where you can improve the performance. All these guidance will be given to the management through budgetary control. Then to create operational efficiency. Now, as you have given target, you will evaluate whether the target is achieved or not. And then the efficiency is measured. So it is the very effective tool to measure efficiency, operational efficiency of every department, and to create cost consciousness. When the target is given, automatically cost consciousness is created. Now, sometimes to motivate the employees, if the budget is given of 10 lakh and if they have achieved or the cost is 9 lakh 80,000, some incentive is given or some prize is declared. So, cost consciousness gets created within the whole organization. Everybody thinks about how the budget will be achieved or how the lower cost should be there than the budget given. So this whole technique creates the atmosphere of cost consciousness. So after going through, you will understand the objectives and functions of budgetary control. Now we will see what are the types of budget. Now mainly the budget is divided according to activity level. There are two types, fixed budget and flexible budget. Fixed budget is designed to remain unchanged. It's irrespective of level of activity. So you will prepare the budget for 10,000 units. You will not change it only. It is prepared for 10,000 units. And then flexible budget. Now actually in practice you must be knowing that you will never say that the production is 10,000 due to change in demand, due to if you want to increase the supply, you have to deviate. So your production may go down to 9,000 or it may go up to 12,000, 15,000. So that is called flexible budget. That much flexibility is maintained in that budget, which is designed to change according to level of activity. So fixed budget is rigid and flexible budget is the flexibility is available in the flexible budget, which is practically very useful. According to functions, what are the types of budget? So when the organization starts to design the budget, it has to consider all functions of the organization, departments of the organization working to achieve the objectives of organization. Now the starting point is sales budget. The organization will study what are the sales required, what is the demand in the market, and accordingly first they will decide the figure of sales. Suppose you want to sell 15,000 units, then the whole budget will be prepared for 15,000 units. So first you will prepare sales budget, the quantity and the price that will be fixed through sales budget. Then to make the sales, you will produce. So you have to decide how much closing stock you want to maintain in the market. So if you want to sell 15,000 units, you may produce 18,000 units and maintain the stock of 3,000 units. So next is production budget. How many goods you are going to produce, maybe during the month, quarter, etc. according to the period of budget. Now, on the basis of production budget, all costs budget are interlinked. Now, suppose you have decided to produce 18,000 units. Accordingly, you have to purchase raw material required. So, then you will prepare purchase budget. Then you will prepare production cost budget. So, to manufacture one unit, what is the material required, what is the labor required, expenses required, everything is linked to the quantity of production. So, you will prepare all costs of production budget. Then you will prepare cash budget, because cash budget gives you the cash balance available or what is the requirement of cash. So that is cash budget. Then next, plant utilization budget. So what is the capacity of plant, how many goods you are going to produce, how you are going to use your plant, that is called plant utilization budget. And then master budget. Master budget means consolidating all budgets together. Sales budget, then all production costs budget, and then you will come to know the proposed figure of profit. So that is called master budget. So before the next financial year starts, the whole exercise is carried out and it is communicated to the concerned responsible person so that they will achieve the particular budget. So this is the whole exercise the organization has to carry out to implement the budgetary control. Now we will see flexible budget. Now in your syllabus, you have to study the practical exercises of preparation of flexible budget and cash budget. So now we will see how the flexible budget is prepared. Now in the particular question, the figures will be given for flexible budget. Suppose you are required to prepare budget for 80%, 90% and 100% level of activity. And in the question, the figures are given for 75% level of activity. Then it will also be given in number of units. So suppose it is given for 7,500 and you are required to prepare for 8,000, 9,000 and 10,000. So this is the flexibility you have to insert in the flexible budget. Now we are going to see how the flexible budget is prepared and what is the format of preparation of a flexible budget. So flexible budget for certain period. Suppose for quarter 1. So this is the heading. Now what is given in the question? In the question it is given, the costs are given for 75% and 7,500 units. So you have the data of 75% and you are preparing for 80% level of activity, 90% level of activity and 100% level of activity. Immediately you will write number of units given are 8,000 units, 9,000 units and 10,000 units. So this is the flexibility, or these are the various levels of production for which you are preparing the budget. Now we will see what is the, we have seen in the classification of cost, behavior wise classification of cost, fixed cost, variable cost and semi-variable cost. We apply this classification of cost in flexible budget. First you will consider all variable cost. Now once again I will repeat the meaning of variable cost. Variable costs are the costs which vary with number of units. So in the question, cost per unit will be given to you. So for example, raw material cost per unit rupees 10. Now what is the feature? Variable cost per unit remains constant and it goes on vary with number of units produced. So there are two columns. One is total and second is cost per unit. So for every level you have to prepare two columns, total cost and cost per unit. Same for 9,000 units, total cost, cost per unit. So what you will do in the question, all variable costs will be given to you where the cost per unit is given. So suppose first is direct material. Cost per unit is suppose 10 rupees. 10 into 8,000, 80,000 will be total cost at 80% level. Cost per unit remains constant. So look carefully, cost per unit is constant in case of variable cost and it varies with number of units. You have to multiply by number of units and then you have to find out total cost. Like this, you will take all variable costs under this particular heading: direct labor, direct expenses, and as we have seen, this is called prime cost, which we have seen in cost sheet. You will take total, all figures you will write here, whatever given, direct labor, direct expenses. If any other variable costs are given in the question, you have to consider those costs, and total is called prime cost. Now, just write total, write prime cost. Total cost, which comes under variable cost. Now, next we are going to take is semi-variable cost. As we have seen in behavior-wise classification, semi-variable cost, some part is variable, some part is fixed. So you will first take variable part and then you will take fixed part. Again you will take total. Then fixed cost. We will take example for fixed cost. We have seen the feature of fixed cost. Fixed cost in total remains constant and it goes on decreasing as you increase the volume of production. So for example, it is given that rupees 5 lakh is the fixed rent you have to pay. Now fixed cost in total remains constant. So suppose you take rupees 5 lakh factory rent. Fixed cost in total remains constant. Here you will take 5 lakh and here you will take 5 lakh. Now what is the cost per unit? If you take at 100% level, 5 lakh divided by 10,000 becomes your cost per unit. That is rupees 50. Now fixed cost per unit goes on changing. What will be fixed cost here? 5 lakh divided by 9,000 and here 5 lakh divided by 8,000. So if you observe, what is the difference between taking variable cost and fixed cost? Variable cost per unit remains constant. You have to multiply by number of units produced, and fixed cost in total remains constant. You have to divide by the number of units to find out cost per unit. Like this, you will prepare the flexible budget and you will take the total. So we have seen all steps for the preparation of flexible budget. Now we will go to the next budget called cash budget. This is another type of budget which is very much required for preparation because every company wants to know what is the cash available. It do not consider the month or anything. So now we will see how to prepare a cash budget. Cash budget is prepared for a specific period of time. So now we will take example. If you are preparing cash budget for next quarter, June, July, August. You are preparing it for 3 months. Now, what will be given in the question? In the question, you will be provided with opening balance of cash, then items of receipts, and items of payments. Generally, the items of receipt, first item is sales. So sales is of two types, cash sales, credit sales. You will receive cash from cash sales immediately. But if you sell it on credit basis, you will receive it when the debtor will pay the amount to you. So receivable from the debtors. So these two will be considered first in making the cash budget. So first cash budget starts with opening balance of cash. Then receipts. First receipt is from cash sales and then receivables from debtor. So whatever you receive from debtor, that will be taken. Now you are focusing on cash system. When you will receive cash, you will record it. When you make credit sales, those are not recorded in cash budget. Actual cash received is recorded in cash budget. So first you will enter the opening balance of cash. Cash sales made in the month of June. Then receivable, how much cash you have received from debtors, which is through credit sale. That will be taken in receivables from debtors. Now there can be any other types of receipts given in the question. Maybe dividend received, interest received, rent received, etc. So you will take all types of receipts under the receipts column. When you say cash, there are two types. Cash coming in, cash going out. All types of cash coming in is in receipt and all type of cash going in is in payment. So now we will see payment. First is payment for raw material. All types of expenses, all types of manufacturing expenses will be taken in payment. So payment made to creditors or cash purchases, wages paid, all other manufacturing expenses paid, tax paid, dividend paid. So all types of items which you are paying, where the cash is going out of the business, will be recorded in payment. So all types of payments you will take given in the question and then again you will take total. Now which equation is followed in finding out closing balance? Very simple. Opening balance plus receipts minus payment is equal to closing balance. These are two receipts. Opening balance plus total receipts minus total payment will be the closing balance of cash for the month of June. Closing balance of June becomes opening balance of July. Same equation will be followed. Opening balance plus receipts minus payment, closing balance of July. That becomes opening balance of August. And then you will close the budget with closing balance of August. So this is the way to prepare cash budget of the business. Cash budget helps to make the decisions related to availability of cash. How much you can spend, how much dividend you can pay is available with this particular reference, that is cash balance available, and then you can make arrangement of cash if required. So this is the utility of cash budget. So these two budgets you are required to prepare for in this particular semester. Thank you.